In today's video, we are going to compare the current price action of Bitcoin with 2018 because it is looking very similar, where in 2018 the price of Bitcoin went sideways for months at a $6,000 support level and ultimately ended up dropping another 50% in November of 2018. We've been going sideways for many weeks now at this $19,000 level. We're coming up to November next month, just a few weeks away. There's obviously a lot of stuff happening with elections and with interest rates and a whole lot of decisions in the macroeconomy that could send things either way. But I want to make this comparison and help prepare you for what would happen if we repeat the 2018 capitulation. If you are new to the channel, welcome, subscribe down below, click the notification bell if you want to get on my email list so I can just send you an email every time I upload a new video or have something important to share. Click the first link in the description down below, enter your name and email, you get on my email list. That way it's completely free and that way you can stay up to date with what is happening in the crypto markets. Alright, so what I have in front of me here is the daily chart of Bitcoin, just a very simple daily chart. We have the 50 moving average in blue, the 200 moving average in red, simple moving average, and we just have the plain default RSI settings, which we're not even really going to look at this point. So what I want to point out here is that we have been sitting, as you can see, on the support level of about 19,000 to about 18,500 for many weeks, actually months. It's since middle of June, since we got our initial bottom. Look how many times we've tested this. And basically the rule in technical analysis, even if you were to see this chart on a hourly chart or a 5-minute chart, more often than not, the more times it comes like this from a downtrend, right? We're coming from a peak, we're bouncing here, bouncing. Eventually, the support gets exhausted, buyers run out of money, and eventually it just breaks down. That is usually what ends up happening. It's not a guarantee, but usually. And that is still actually what I'm expecting at this point, because you can see over here, okay, we had that initial sell-off in middle of June. That is when we got our final wick low. We still haven't gone below that, by the way. So I made a video back in May predicting that based on the 3-day death cross, middle of June would be a wick low, and that is what we got. We got a big bounce from 17,000, the high 17,000s, all the way up to 25,000. At this point, we were seeing negative divergences on the RSI on 12-hour time frames. I also made a video about that at the time, warning that it was probably going to go back down. That is exactly what happened. It went all the way from 25,000 over here to 18,500. And since then, yes, we've gotten some scam wicks. You can see over here, massive squeeze. Because a lot of people were shorting, betting on a breakdown at this point, because that's basically the rule. Okay, you test support so many times, eventually it is going to break down. So people were shorting this all the way. Then you get this big scam pump, this squeeze that liquidates all these people who are shorting with high leverage. Okay, and then of course there's people who are going to be FOMOing in. They're going to be buying. They're thinking, oh, we're going back to the moon, and then of course it comes right back down. And the people who bought back up here, they got wrecked. And I actually also made a video about this, analyzing these scam pumps and how to trade them, so you can check that out too. I will link to it up here or in the description down below. But where we are at right now, look at what's happening. Okay, we've got this horizontal support over here between 18.5 and 19,000. We've touched it 1, 2, 3, 4, 5 times and many wicks in between. Okay, and every time we go up with a scam pump, okay, there's nothing real about this. It's just a bunch of people squeezing the shorts, the leverage positions, and then it comes back down. But you can see every time that's happened, the last 3 times, it's been rejected by the 50-day moving average over here in blue, and it makes a lower high every time. So that's telling us that the people who are manipulating these scam pumps, they can't even get it higher than where it was the last time, showing that sellers are just jumping in quicker every single time, which means there's just massive selling pressure every time, resulting in a lower high. So right now we are approaching very much a decision point where, in my opinion, we are going to get a resolution very soon, potentially in a matter of days, but it could also take a few weeks. Keep in mind the election is on the 8th of November, so that's what is that? That's about 2 to 3 weeks away. And we of course have the Fed decision for the next interest rate on November 2nd, so that's a little bit less than 2 weeks. So we are going to get some sort of resolution, in my opinion, pretty soon. And as long as we're below this 50-day moving average, the blue one, and we're creating these lower highs, the odds what the chart is telling me anyway, how I interpret it, is we've got this massive selling pressure, and it's just a matter of time before we break down here. Now, of course, can we get a bullish resolution? Can everything turn around? Yes, that is a possibility, even though I'm not favoring it. But how that would play out is basically, first, we would need to see a reclaim of this 50-day moving average. So at this point, that's still pretty low. It's about 19.7. We can reclaim 19.7. Then, of course, we have this lower high I want to see taken out. So basically, if we can flip 20.5, so this level over here, approximately 20.5, if we can flip that and stay above that, then I do think it's possible that we actually see a run to the 200 or potentially this high, which would be about 25,000. So in case of a bullish scenario, again, we don't know what's going to happen, if there's going to be any central bank policy changes, if the Federal Reserve increases rates less than expected, or if they start talking about cutting, which I don't think they will do. But let's just talk hypothetically. If we get a bullish scenario, we need to be prepared for it. But that only comes upon confirmation. So as long as we're trading below this 50-day moving average, as long as we're below $20,000, I think the risk increases every single day of a breakdown. Okay, so the bulls need to step in. We need to reclaim 20.5, and we might have a chance at 25K. And even then, there's a lot of levels in between there. But until that happens, basically, I think the resolution of what's going to happen here in the next couple of weeks or sooner is a breakdown. And just real quick to hop over into the weekly chart, you can see over here, we're sitting on the support, which is the 2017 all-time high. But a breakdown, like what I'm expecting, would probably take us pretty quickly to lower levels, and I think the target would be here. The fair value gap is an imbalance on this weekly candle. It is also much more of a support and resistance. So resistance here, resistance here. There's a lot more historical price activity here, and I think that would make more sense. If we break down, there's not much support between where we are now at 19,000 and then about 13,000 to potentially 11,500, something like that. So if we were to break down, I think we'd probably go down pretty fast between 10 and 14,000, and that would then potentially really be the bottom of this bear market, just like it was in 2018. So let's go have a look at the 2018 capitulation in the end of the bear market, which coincidentally also very much happened in the same way it happened in November of 2018, and we're almost in November of 2022. The 4-year cycle is still very much playing out. Okay, we had a top at the end of 2017. The previous peak before that was also at the end of 2013. So 4 years, end of 2013, end of 2017, end of 2021. That 4-year cycle somehow is still playing out almost perfectly. And the bear market of 2022, it started at almost the same time as the bear market of 2018, right? And that one lasted for a year into November, where we got the final capitulation. So far, we've almost done a year here, and we are heading into November. Could we see a potential final capitulation like we saw in 2018? Potentially. So let's have a look at the daily chart. Let's go look at what happened in 2018. Okay, so this is a daily chart right now, and you can see how similar that price action is, even though it took much longer for it to happen. So we had the initial sharp drop from the 2017 all-time high in December 2017. We dropped all the way back down to 6,000, right? Relatively quickly. You can see that happened in a short period of time. It started in the middle of December, and you can see by February, so literally 2 months later, the market had dropped 70%. So it went down to that 6K level, and that 6K level ended up being a very strong support for a long time until it eventually broke down. So you can see, you bounced up, broke down, kind of retested it. I guess we can draw a bit of a wider range, but it's a similar kind of thing, right? So we have the 6K level-ish, bounced, again, create a lower high, dropped back into the support. People who were trying to short it there, they got wrecked again with the bear market rally, bounced, but again, lower high, lower high, lower high, lower high, lower high, until eventually it drops. So you can see what's happening here. So people who are shorting this too quickly, they get wrecked because it does take a lot of time, and there are some very strong bounces. So if you were shorting this on leverage, of course, you got wrecked on these bounces, right? But you can see lower highs all the time, showing that sellers are stepping in at lower levels every single time. The buyers can't push it higher, they can't push it higher. And every time, eventually, people trying to hold up the support, the buyers that are supporting this, that are absorbing that selling pressure, eventually they run out of money. There's some catalyst, the bears get too strong, the selling pressure gets too strong, and it drops and it breaks down. And this may not look like a lot on the chart, but it is literally a 50% decline. You can see over there, 52%, right? And that happened in a very quick period of time. That happened literally in about a month. And you can see it started over here on Wednesday, the 14th of November was the start of the breakdown, which lasted until about middle of December. So exactly about a month for a 50% decline. And keep in mind, that was actually the complete bear market bottom. That was the lowest that it went, even though in March 2020, we did end up selling off. We did not get to those lows. So that was the ultimate low right over here in December of 2018. Then we had about a 6-month sideways period. We had a bear market rally, and quite a violent one, where we actually ended up going from 3,000 to about 13,000, right? That's the bear market rally in 2019. And then, of course, we had March 2020 sell-off, which almost retested the lows. And you can see here, what's interesting to observe is that filled the fair value gap, the imbalance. You can see over here, when it moved up, it created this almost kind of gap, fair value gap and imbalance. March 2020, it came and filled it, moved back up, and it continued a lot higher. So imagine this is the situation that's going to unfold again. I'm not saying it will, but so far that 4-year cycle has been almost perfectly accurate. So we will know, of course, in a few weeks, are we going to get that breakdown? If we do, and we're dropping 50% from current levels, that could take us somewhere between 10 and 14,000, maybe even a little bit of a wick below 10,000 again. That sounds crazy, but if this repeats, who knows what's going to happen in the world in the next couple of weeks? Potentially that could happen. And again, I'm only sharing this with you so you can be prepared, because if we do get a similar situation and we do drop, say, 50% over the next few weeks in a very short period of time and then quickly recover, if you are prepared for that and you are able to buy, imagine it wicks to like $9,000. If you're able to buy under 10,000 and it goes straight back up to 15 or 20 and that was the low and it doesn't come back there again over the coming years and it just continues to go up to $50, $100, $200,000 over the next 5 years, then obviously you'd have wanted to buy that wick low. So be prepared for it. I don't know if it's going to happen. I can't say with certainty. Nobody can, because we can't predict the future. But we look at these probabilities and we're saying, hey, this looks very, very similar. Everything's been very similar so far. And we're seeing these lower highs right now in our own price. What if we get that drop? So imagine we drop to, say, $10,000. We go sideways for 6 months. And then in 2023, which is comparable with the 4-year cycle of 2019, what if we get a nice rally? Right? What if we go from 10,000 to 40,000 in 2023 as a bear market rally? It doesn't mean we go back to the all-time high. It could be literally this, right? Because this did almost a 5x in 2019 and then came all the way back down. So what if we go from 10,000 to 40,000 and then come all the way back down to 15,000 or 14,000 before starting a new bull market, potentially in 2024 or 2025, and then going to 100,000, 200,000 or more. Okay, that is still potentially a scenario. So again, back to a daily chart over here with our current scenario where we're sitting on that support. We don't know if it's going to happen. We'll know within the next month or so, I think. But as long as we're making these lower highs, you can see the support. Basically, the rule is the more times it touches the support coming from a downtrend, the more likely it is to break down. If we do see a bullish resolution from this, we were just looking at a reclaim of 20.5, a reclaim of this level. Potentially then we can see 25,000. If we get that. Until we get that though, I think the risk is to the downside, and that is what I'm looking for, because hopefully I actually do want this to kind of break down, and I would like a chance to be able to buy $10,000 Bitcoin or around that area. I think that would be really, really good. So if we do get that, I'm ready for it, I'm prepared for it. But if we do get the bullish resolution and we start to flip 20.5, I will be considering flipping bullish and taking positions that way. So as always, it's not financial advice. Please make your own decision. But if you enjoyed this video, smash the like button. Share this with your friends and family on social media. Post it on Twitter, post it on your Facebook, wherever you want to share it. It helps get it out to more people so they can also be prepared and hopefully be able to profit more from these markets. And finally, if you do want to continue to learn more from me, I have a complete VIP mentorship and community. It is the second link in the description down below. Click that. All the details are explained. It's basically courses, it's training, it's regular updates, daily, weekly, monthly updates, a newsletter. We have a private Discord chat group for all our members where I'm in there every day sharing charts and updates. So if you want to be a part of that and you want a better understanding of these crypto markets and trading crypto markets, then click that second link. Everything is displayed there. If you want to join, we have a full money back guarantee too, so you can come try it out at no risk. If you're not happy, you get a full refund. Thanks for watching, guys. I will see you in the next video.